time Rani Jabban, head of Treasury at Arab Bank, was here at the Geneva Forex Event back in June, he was talking about a potential Greece default and also contagion in the European banking market. He's back here tonight so that I can find out where he stands now.
You can call it whatever you want. You can use semantics or whatever, technical default or not technical default. I mean, we're actually in this situation. It's going to happen. Greece has got problems to pay its existing debts. We're adding more debts, and there's no revenue coming in. It's falling into recession deeper and deeper. So I think it's going to be a bit more. The situation is going to worsen. So it's going to be inevitable. Yeah.
But I mean, Angela Merkel is completely determined that this isn't going to happen. They're going to stand by. They've only just had a meeting this week.
Yeah, well, she said also that the European Stability Fund is not going to be widened, that a lot of things. I mean, but it's inevitable. They can do whatever they want. They can change the wordings. They can say it put it as a technical default or not. But it's there.
Okay.
The writing is on the wall.
And if it does happen, what will that even mean? What will be the consequences of that?
I think it's more or less priced now. The important thing is to ring fence an eventual, a probable default of Greece and to protect Italy. This is the main piece of the puzzle. Italy, the third largest debt market in the world, and if that falls, it's going to be a disaster for the world finance. And that's why the United States, that's why China, that's why even Brazil are now reacting and saying, well, they have to do something for Europe. It's not a European problem, it's not a Eurocentric problem, it's a problem for the global financial world. They have to intervene in a way because if the European banks, which have a global role, start to be under pressure, the whole financial world and the global growth is already really slowing down. And we know the problem that for China, politically and socially, if the global growth starts to slow down, because the internal consumption is not as good enough to take over what they lose on the global demand. So that's a problem. For Brazil also it's going to be a problem if they start to have the global growth fully faltering. And the United States are seeing what's happening in Europe with the European banks as a big threat to their own economy, which is not in a great shape. So
yeah, I mean, even this week we've had BNP Paribas and SocGen. They've both been downgraded by Moody's.
Yeah.
Is this the beginning then?
Well, BNP has been on negative watch. It hasn't been downgraded. Crédit Agricole and SocGen have been downgraded. I think the main fault here is that we had the European crisis started almost a year and a half ago. And then we had Bernanke with his quantitative easing too, so people lost the focus on the European debt, and we completely forgot about it for almost a year. Now it's back into focus, and the banks did shore up the Tier 1 capital, did do some efforts. But the problem is the confidence, and the two stress tests we had, they're very tame, toothless, and they absolutely did not contribute to put some confidence back into market. On the contrary. So I think the European authorities are to blame here, because it was a good occasion to make the banks leaner, to shore up their capital and to show it to the world, which they did not. I mean, having a haircut of 3% on Greek debt and others, it was not serious. It was absolutely not enough. So it was completely disregarded by the markets at the time, and now it's coming back because they think these stress tests are worthless. So it's a problem of confidence, and this is how it grows when the banks, it's mainly a problem of confidence. When you have panic and a problem of confidence coming through, so we're going to have a lot more pressure. And not only the French banks. We talk about the French banks because of their exposure to the Greek economy. and to the Italian debt, but the German economy, German banks are as much exposed to Italy and to other peripheral, except Greece, and you have the UK banks also. I mean, they have their own exposure. So it's really a European and even a global problem. On the other hand, there were talks today, rumors today this morning about a sort of European version of TARP being introduced later. That's why euro started to go up before the ECB announced its swap lines being open with the Fed to help get dollar funding for the European banks. I mean, we know that the rumors were based on SocGen or BNP not getting enough dollar funding, not being able to raise enough cash in dollars. So I mean, this makes sense in a way because we need to reintroduce confidence about the European banks, not only the French banks.
Be sure to check out Dukascopy TV for more exclusive interviews from top banks here in Geneva and indeed across the world. Goodbye for now.